You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
All right, everybody, Jim Iorio with me. We got a live one today. This is going to be good. Jim just had his newsletter out there, and if you have not got access to that newsletter, it's the Unfiltered Investment Newsletter. I'm telling you right now, go get it. Jim Iorio, how are you, man?
Good to see you, my friend.
Yeah, listen, the interesting week this week. Markets making new highs, continue to make new highs. I'm nervous. I think the markets are making too much highs. I think we're getting an AI bubble. Am I right or wrong here?
Well, okay, I'm not going to say you're wrong. Here's what the parts I don't agree with you on. So I think something big happened this week on Wednesday, and I'm going to get to why it's important if people think I'm just off on some sort of wild tangent, which I usually do. So it's wise of them to think that. So on Wednesday at about 11 a.m. Eastern, the rumor came out that Trump was planning on firing Powell, right? Now, let's remember how the markets reacted. So the dollar went lower, which that makes sense because the dollar should go lower because the replacement would be an Uber dove that Trump wanted, of course. But stocks and bonds also got hit. So that kind of negates the dollar going lower and makes it seem like the market, for one brief second, was saying that we're not going to tolerate any banana Republic-y bullshit in going outside the law. And so the question is, one, the market can say that, but did anyone hear it? And the answer to that is, I think, yes. It was only about 45 minutes later that the White House came out and walked back the rumor. So one of two things happened. Trump looked at the markets on his ticker and said, oh, wow, it's things are getting, they're not buying this. Or Scott Bessent, saner minds, called and said, you got to walk that back. The market doesn't like it. So what this indicates to me is that perhaps, just perhaps, we have entered a period where the new Donald Trump, because we always knew that there came a day that he couldn't be as chaotic for fear of the midterm elections and getting swamped. So the question was just, when were we going to get close enough to hear some more sanity? And I think that might have been an indication that we're there. Does that make any sense to you, Stephen?
100%. I think I said this 2 days ago and then yesterday again, that in Washington, D.C., we call it a trial balloon, that he was floating out some ideas, what he thought, and it got popped like almost immediately out there.
Bingo, popped.
But what I thought was interesting, Jim, was that it wasn't that, okay, I didn't say that. I did not make up that I'm going to remove Powell. And then almost immediately you see Kevin Warsh saying, I agree with the president. And then now yesterday and today you see Waller saying, I would like to be the Fed chair. It's like Game of Thrones has already started there. Like, give me a break, guys.
Okay, Warsh and Waller, nothing should be listened to whatever they say because they both are positioning themselves to be the next Fed chair, and they want it so badly. You can see it happening. By the way, there was something I was going to get to in my first rant about why that was one part of why I'm somewhat bullish the market, because I think it's a good sign. But also this next part involves the Fed, and it certainly will involve Warsh and Waller as well. M2 money supply has been growing aggressively and is at all-time highs. More importantly, the Fed's balance sheet, which they were reducing at $60 billion per month, has been reduced now to $5 billion per month that they're reducing. So to me, any unexpected lack of quantitative tightening, if the market didn't expect that, that kind of equals a bit of an ease to me. Not a big one, but I think that the quantitative tightening is just about over. So maybe Powell is listening and swinging to slightly more dovish. I do think that Warsh or Waller will be significantly more dovish if they come in, and equity markets should like that. But what should like it even more, the liquidity trade that's going on now with Bitcoin, gold, silver, platinum, palladium, that should like it even more than stocks like it.
Yeah, but you know, in the normal times, I don't know, this is not normal times. If someone were to say, I'm removing the Fed chair, the markets should just be getting slaughtered. I mean, this is not a normal situation. We don't like this Fed being intervened by the president of the United States. He said something very interesting. He blamed Biden for picking Powell, and he walked it back and said, well, you know, why did Biden re-up him? I would not have re-upped him. I didn't pick him. Yet he was the guy that picked him, and now he doesn't like him because he's not lowering the rates. But the thing that Powell has been saying is that I'm not lowering rates because I don't understand the tariffs, how it's going to affect the macro side of things. Inflation is still sticky. It's not 2% yet. Still having problems there. The housing market is starting to fall apart. So I think there's a little bit of questioning there. But he said jobs are still pretty strong. So you know what? I can't get too mad at Powell for what he's saying. It seems that the numbers are adding up to him.
Well, this is so funny because I disagree with you, but only a little bit. I think that he should cut by 25 basis points because let's say you and I were Fed chair right now, and he fully believes two things. One, that inflation could get sticky and re-up itself, but two, that we are above whatever the mythical neutral rate is. He said that many, many times. So the last time when he cut back in September, he cut, I think it was 50 basis points, and 10-year yields shot through the roof. So that was the market telling him with no uncertainty at all that you've made a mistake. You're cutting into an inflationary period. So let's say you and I are in charge of the Fed. I could convince you or you convince me, let's cut 25 basis points and keep our eyes locked on the 10-year because the 10-year is going to tell us if we are right or wrong. And if yields go down a little bit, it's saying, yeah, we're above the neutral rate and we're not that worried about inflation. And you said Powell's worried about inflation. Austin Goolsbee came out today, said he was slightly worried about inflation. It seems that they're somewhat lonely. A lot of people are less worried about it than they were before. Even, when that PPI came out, it literally blew by all 50 economists who were interviewed in Bloomberg and was lower than any one of them predicted. So we at the Unfiltered Investors have been arguing all year that tariffs aren't necessarily inflationary, and usually they're not. However, if it sticks, which I don't think it will stick, that should be inflationary if that really sticks, the one that was instituted a week ago or so.
Yeah, I just looked over. It's 4.42 right now on the 10-year. Still slipping a little bit. I like yourself, I have been calling for rates to be lower. I think that's it's asinine that these rates are this high. We need to, the other issue with Powell right now that he's concerned about, and Trump's on his burner, and he's doing it right now, is this immigration issue. So if all of these people are getting kicked out of the country that are mowing the yards and cooking breakfast and dinner for everybody, is this also causing a problem? So he says tariffs and now immigration issue.
So the immigration issue, I'm going to be not helpful in this at all because I think it has huge economic ramifications. I just cannot pinpoint exactly what they are yet.
Yeah,
we were spending a lot of money as a government in encouraging and supporting illegal immigrants as they came in. Of course, I want that stopped. I think it was a bad policy. Could it cause somewhat of a labor shortage? Possibly. Which, by the way, I just talked myself into something because I always thought that when the next recession was going to start to rear its head, that we're going to see lots of job losses. We have not seen lots of job losses. We've seen less hours worked per week in the last couple unemployment numbers, but these big companies are not letting people go. I thought it was kind of in response to the labor shortage that we had a couple of years ago. Scars like that don't go away right away. It could also mean that they perceive that there's going to be a greater labor shortage if we're really going to follow through with these mass deportations, which, by the way, try not to be political, but every policy I think should be looked at and evaluated. I think trying to deport 15 million illegal immigrants is stupid and inelegant, and it'll only end up biting them in the ass, in my opinion.
Yeah, I agree with you. I think that it's baby in the bathwater is getting a little bit much, the bad hombre out there. But okay, let's get to it. If the world is falling apart and you don't think so, then why is gold at 3,300? Why is silver still at 38? There's a lot of things in the background here. And of course, Bitcoin still holding at 118,000. These are things that you normally invest in when you think the world's falling apart.
Right. So let me pick that apart real quick, because the gold rally has led everything. So let's look at that in a vacuum real quick. And I believe that is mostly a central bank trade. In 2016, 64% of the world's reserves were held in the dollar U.S. treasuries. By now, that has gone to 57%. Is 7% a huge deal? No, but it can show ripples in the gold market because that's what they're replacing their dollar holdings with. So gold goes through the roof. Now we throw in the point I made before that liquidity is increasing in this market, not going down. M2 money supply is high, and the Fed has already started a cousin of easing by lowering quantitative tightening. And then all of a sudden, gold's being pushed higher by two reasons now. And then the market all of a sudden looks for what the next shoe to drop will be. And it seemed like in an instant, they chose, well, copper went because of the tariffs, but then it was all of a sudden platinum, silver, Bitcoin. Man, that move. And again, I was on top of this movement, not pat myself on the back. It is well documented. 110,500. As soon as it traded that, I bought more Bitcoin because I thought it was going to the moon, breaking out of that 2 months consolidation period. And it did. But I think so. It's a combination of the gold catch up, the proxy, along with liquidity, and about everything being rosy economically. I don't know. I'm still a bull on the stock market, but I think there are still things to worry about. Like, what if Jerome Powell and Austin Goolsbee is right, and then we get a resurgence of inflation? We're not going to like that a lot, but I don't think that's going to happen. My base case is it's not, but that doesn't mean it won't.
News just came out here, Jim, that Trump, Putin, and Xi Jinping may hold a joint meeting in Beijing this September. Is this a kumbaya moment?
Could be. Do you? When I see these things, who do you trust? Do you trust the Chinese coming out with this? Do you trust Donald Trump, even if he says it as well? I guess I trust them both about this much. It's not like I think it's a bullshit headline. I want to see it happen. If that happens, I think it would be enormous. I think an actual visual meeting, China, Russia, the United States, I think that would be a big deal. Because remember what's at stake here. It's not just, it's the war in Ukraine, obviously. It's the China trade deal, obviously. It's the fact that China hasn't been buying nearly as much U.S. treasuries. And it is not that unusual for Donald Trump to tie things like that into an agreement. Like, oh yeah, by the way, and you got to start buying treasuries again. And people have in the past done it. I'm not saying he's some sort of wizard deal maker. I'm saying he has a pretty decent track record with things like this in the past. And by the way, I bash Donald Trump when he deserves it. I like to think, and compliment him when he deserves it.
Yeah, I agree with you. I mean, I don't, being who the president is, we have to always, as traders and investors, we always have to change our philosophies and how we trade. Okay, so he spent almost 2.5 years on the campaign trail. Here we are going into July now, almost now August. Do you feel like he's on the path that he said he was going to be at when he started the process?
I suppose so. I thought 2025 was going to be a tumultuous year as we kind of went from one system of economic government to another, regardless if you feel that we were going from bad to better, which is what I thought, but that's not important. Regardless if you think that or not, transitions are inelegant and clumsy. And this one was, but then all of a sudden on April 8th, it heated up and had a peak of unpredictable emotional selling. And since that time, it's been somewhat of a huge momentum thrust higher, markets and economic. Now that we're not as much worried about tariffs, that's a good thing. Now that, do I have to say big, beautiful bill again? Tell me I don't have to say it. Tell me something else I can call it. It makes me embarrassed to say it. So let's call it the BBB. The fact that the BBB was passed and is now law, that's a good thing. Markets like certainty. So I think from an economic standpoint, he's doing a good job. I think the BBB spends too much damn money. And I believed that we were going to have to run bigger deficits in 2025 in order to set us up for reducing deficits in 2026. That being said, I have very little confidence that they will reduce deficits in 2026. But either way, this was the essential first step. Do you agree with that? I'm curious.
No. I don't know, to be honest with you. I've always prided myself on kind of understanding the markets and the world side of things. I will tell you that there's too many. In the past, you could always put your fingers around one or two or three huge geopolitical issues going on. To me, there's just too many things going on. China, Russia, tariffs. I mean, it is really chaotic for a normal trading period. And for us to be moving up in this trading period like this does make me nervous. Now, the question I was going to ask you is I was with Dan Niles up in New York a few weeks back. He says the second half of the year is going to be very bad, negative, and by Thanksgiving, it won't be a fun Thanksgiving. Do you agree with that? And that's kind of what I'm thinking myself.
See, I don't see what's going to knock us down. And by the way, I have run my long positions, even investment and in trading, that are heavily hedged, particularly when puts are cheap. That's why God created puts, to make you sleep at night. Right. Did God create puts? I don't know if he did. But anyway, so that's, I do have put protection on. And every time there's good, big up days, I increase a little bit. I've spent quite a bit on it in case that happens. But that being said, I don't see what's like, if he could tell me what the fundamental impetus is of that, and if it's going to be a resurgence of inflation, that makes some sense to me. If it's going to be a crumbling of the labor market, which is, by the way, what I believed a week and a half ago was happening, and I was wrong. If it's going to be a crumbling of the labor market coupled with increased inflation due to the tariffs, now that's the recipe that I would agree with Dan and with you. But in absence of that, I don't yet. I think you got to play the hand you're dealt, and right now it seems like higher.
And we have a question here from Shayak Nazir, posted here for you, asking if you trade Forex.
All the time. Trade Forex all the time. I think the dollar is getting a little stretched to the downside. You get to a point with the euro do you have the euro in front of you? We're at 116, 117.
Yeah,
you get to a point where these European countries are going to get a little bit pissed about the strength of their own currency. So I actually think that there's going to be a reversal and some dollar strength. And people point out, well, Donald Trump wants a weak dollar. I don't really necessarily care what Donald Trump wants. If we're attracting foreign investment, yes, I believe, like I said before, we spend too much money hurting the dollar. The Fed is already kind of easing, hurting the dollar. But I don't believe that's going to be very long. I'd be a seller of the euro up here and a buyer of the dollar.
Yeah, I mean, I've heard quite a bit of people talking about that the dollar itself should get stronger. Should get stronger here as more money is pulling into the dollar than it has in a little while here. A lot of people have been pulling dollars out, but now it's going right back in.
So I think one of the things that started this, and I think the movement down in the dollar, and let's just talk against the euro. I think part of that, remember when it started talking about that Germany was going to have to do fiscal stimulus, part of it to be to cover their own defense. And I think that constituted some taking off of the long dollar short euro trade, and they had to repatriate euros as well. And I think that started it. And then it was a 3 or 4 year trade that needs to be unwound. So now people are selling dollars and buying the euro. But I don't think that means necessarily that there's been some sort of fundamental shift. I think it's more of a market positioning trade.
And how are you positioning yourself with you just long the Dixie, or are you just?
What I'm going to be essentially is short the euro, Aussie, and the British, but I'm not at all yet. As a matter of fact, today, as just a day trade, I'm long British pound and the Aussie dollar just because the technical setup looked good to me for the day. But I'm going to look for broader topping patterns that look for rollover plays in those markets.
Are you playing the pound versus the yen here?
No, I usually trade everything versus the dollar, and I don't trade the yen very often. I don't know why. You just get in the habit of what you trade. So I mostly trade Aussie, euro, and British pound.
Yeah, yep. And any of those pairs that you like outside of the Dixie, like Aussie versus euro, anything like that, crazy ones?
No, I would say when the euro starts to crack, I think it cracks more than the Canada or the Aussie. So I would be interested in shorting the euro against those, but I haven't looked at the chart yet.
I love it. All right. Hope that answers your question, Shayak Nazir. Okay, let's get right to it. And if you want to talk about anything else, anything out there that you're interested in, stocks that you really like right here?
I'm back. So we talked about the move in Bitcoin when it exploded higher. And now we're looking at gold that's forming a similar pattern, a 2-month pattern of a consolidation period. And I think we're getting close to a breakout there, which, by the way, you said stocks, I know, because I am going to look. The miners in both gold and silver have been wholly unloved, right? So I am going to be looking at gold and silver miners on this move, and I haven't before. That's gold, right?
Yep.
So look at that pattern. It's 2 months of consolidation, indecision. And remember, the corrections this is not to you because I know you know that. Corrections can happen in 2 ways. They can go down or they just can go sideways for a hell of a long time. This has gone sideways for a while, and it doesn't look like it wants to break that downside one because I think the fundamental thesis is still bullish. So a trade above, let's call it 3,400, I start to get a little bit greedy. 3,450, I get greedier. 3,550 is where I get the greediest.
Yeah, and you can see where the histogram and the CCI is all, and RSI is all looking pointing to the upside. So more push to the upside, because I think we had Peter Thomas on here not too long ago talking about if 3,300 held on gold, that we should push on higher up.
Right. And he's right. And I was thinking the same thing. I didn't have it pinpointed to that level, but I was thinking the opportunity was for gold to correct, and it didn't really correct. To me, that suggests that they're and again, I think a lot of it is central bank buying. And remember, they are not price sensitive really at all. So they buy when it's anywhere, and I think that's kept a little bit of a floor.
And you think governments are still buying gold as heavy as they have been?
Yeah, even in May, China came out and said they didn't buy any gold. And then in May, it turned out from the World Gold Council that they had been aggressive buyers of gold in May. So again, even if we are hearing that the world central banks are buying 1,000 tons per year, it's probably even more than that, because a lot of these countries want some anonymity and don't want necessarily everyone to know what they hold and if they're not holding dollars anymore. So I think it's even more so than we're hearing.
All right, Jim Iori, I'll post it here for everybody to see. Also, go up to TJM Brokerage as well. Jim Iorio, I'll see you here next week, my man.
Thank you, brother. Good to see you, Stephen.
You too.